funny. People are like, it's so expensive. And it's like, you're talking about going from $60 a month to $80. If that's your mindset, open up and think abundantly and don't think so small, scarcity minded.
So that in the future, as my cash flow increases, I can convert that and I'll have that place to store my money so I can then pull money out and invest in other things in the future. And
he relies on Social Security benefits. They gave him, I think, 19 days rehab therapy or whatever, and then that was it. They just kick him out. And it's like, again, it was one of those eye-opening experiences where like I'm seeing it in real life, how beneficial a policy would be if he had set it up.
Hey, what's going on, Cashflow Hackers? It's Chris with Life 180, and I got my buddy Charles and Matt here with me. You're used to seeing them in the panel interview, but here we are. They are down here for a mastermind, and we're getting stuff done. And thought, when we're together, there's nothing more fun than creating some content and talking about this amazingly enthralling topic of life insurance. And, I joke about it a lot, but at the end of the day, it's super important. We all do what we do because we believe in it so passionately. We were just filming another video, and I said something like to the accord of like, I get a lot of comments of people that are like, oh, you only have your opinions of doing this because of the fact that, you're making money when you sell it. And it's like, maybe I'm selling it because I believe in it, and it's amazing to be involved in a business where I can literally make money based on adding value to people's lives. Hard for some people to, I guess, wrap their head around that, but I digress. This topic that we're going to talk about today is extremely important. It's not something that I used to give two craps about, quite frankly. I was probably one of the worst people. If you go look at my content 5, 6, 7 years ago, I was all about banking and who cares about the life insurance and cash value and real estate investing and all this stuff. And I never talked about the life insurance part. As a father and as a husband, obviously, as my kids have gotten older and as I've started to feel my own mortality a little bit, being in my mid-40s now, the life insurance comes a bit more important, obviously. But I've also had some personal experiences that have been wildly impactful in my own life and have made me realize, and, I've grown and realized that, wow, like, life insurance is the foundation of everything. Like, without the life insurance, all the strategies we talk about are absolutely nothing.
Yep.
Or they're not nothing, but you might as well just go to your bank, and that's it. So that said, what I'd love to do in this video is let's talk about the importance of locking in your insurability and making sure that you don't take it for granted. I think a lot of people delay getting insurance because they feel like they'll always be able to get it. And we all have stories from that. So I got a couple stories that I want to share. I know you got a couple, probably you got a couple. And so let's start with you.
Yeah. So it's been interesting starting to work with clients in the industry. And I recently had a very similar experience working with a client that it was just such an eye-opener on why it's so important to at least lock in insurability. We talk a lot about the banking side of using whole life insurance and all these other benefits. And I have 2 policies that I use in my own life right now. Fantastic strategy.
Yep.
I realize, though, not everybody is in a position to set those policies up right now. I certainly wasn't not that long ago, right?
Yep.
But that's no excuse to not at least lock in insurability with a convertible term policy that you can eventually convert into the whole life later on.
Not an IUL convertible term?
That's what I meant. I'm sorry.
Oh, no.
Yeah, IUL.
Very sarcasm.
Yeah,
sarcasm.
Definitely whole life. But it was the recent experience I had was such an eye-opener working with this client. We actually had an application in. He wanted to implement the infinite banking concept and set up a policy. And literally 5 days before his medical exam, I received a text from him saying that I think we need to set up the policy on my wife now. So I called him to get more details on it, and he told me what happened 2 days before. He's only 50 years old, pretty decent health, a little overweight, nothing crazy though, no major health issues. And he was at the park with his family, pushing his 3-year-old daughter in the stroller. All of a sudden, 3 years old, and all of a sudden he started experiencing massive chest pain and shortness of breath. Didn't think anything of it. It eventually went away. The very next night it happened again. That's when he went to the ER. Sure enough, finds out he has a 90% blockage in his artery, has to have a stent put in.
Wow.
Almost killed him.
Yeah.
There was the artery they call the Widowmaker.
Clog will.
Yeah, it was the Widowmaker one, whatever.
Yeah.
And at that point, obviously the application is dead in the water. He's not going to get approved.
Yep.
But it was just like, it gave me chills listening to that story, because of just like, people will, like you said, put off getting insurance. Oh, I can't afford it, or, it's not that important right now, whatnot. But anything can happen at any time.
Yeah.
Like I like to think I take pretty good care of myself. We all do. But you don't know what's going to happen. It doesn't even need to necessarily be an internal illness, maybe get into an accident or whatnot.
Yeah.
And now all of a sudden you can't qualify. And, we're doing the policy on his wife and everything, but now he doesn't have anywhere near as much life insurance as he should have, and he's not going to be able to do it for a long time.
Yeah.
And so, a lot of the content I've been creating lately has been around, like, guys, even if you're on the budget, like, look, I get it, but there's no excuse not to lock in, $20, $30 a month worth of convertible term life insurance that you can eventually convert into whole life later on.
I mean, I was just telling you guys, I got super preferred rating. That's my flex for the day. But I got $2 million, and it was only $1,440 a year.
Awesome.
A year for $2 million of coverage.
That's crazy.
I look at it and I go, I can't afford to not have that, right? Like, for my family and for everything, and it locks in the insurability. So on top of everything else that I have going on with the cash value policies, I now have this additional policy that I have that I plan to convert.
Yep.
And now next time I want to convert, I don't have to go think about doing underwriting again and all the different things. And the way I look at it, and it goes back, we talk about this all the time, is like buying your net worth, building your cash flow.
I love that.
A lot of times people just think, well, I'm not going to get it until I can afford it. Well, getting it is a privilege. That's what Nelson Nash always said. Having this policy is a privilege.
Yep.
So what we look at in that statement, when you really break it down, that's saying, if you can't afford it, if you have a lot of debt, if your finances are not, and your financial house is not in order, lock in the coverage. When we say lock in your insurability, we mean that basically what we're saying is buy a damn life insurance policy, right? Get a convertible term policy, because now you're protected on the short term, and you guarantee that you can be insured for whatever that period of term policy is. There's always a conversion period. Sometimes it's the entire policy. Sometimes if it's like a 20-year term, you can convert it like up to year 18 or like up to year 18 or age 65, whichever comes first. So you got to look at the details of the conversion. But the ability to lock in that insurability, meaning if I'm 8 years in, if I bought a convertible, like the convertible term policy I just bought, for myself, $2 million. If 8 years from now, I haven't converted it yet, I get diagnosed with cancer, I can convert that policy on a guaranteed basis to permanent insurance. Because the danger would be, if it were a 10-year term policy, that I get cancer, that I live 2.5 years, the term expires and nobody gets the $2 million, and the insurance company keeps all the premium that I paid.
Right.
That's normally what happens. Right. But if you understand what you're doing, I would convert that policy to a whole life policy, all $2 million of it. It would be there on a guaranteed basis.
Yep.
And now we're completely protected.
100%.
And I can keep doing the financial plans and building my cash flow and building my future the way that I wanted to. And I promise you, your thoughts around life insurance will change drastically when you get diagnosed with cancer.
Yeah, absolutely.
Fair enough?
Fair enough. So you don't want to just buy any term policy, though. You want to make sure that you're buying with companies that you can convert to participating mutually owned insurance companies, so that you can take advantage of whole life policy, the ones that we prefer when designing policies for ourselves and for our clients, right? Yeah. So an example of me personally, how I think about term, like I'm actually in the process of getting another term policy, right? But full disclosure, I've been pushing it down. Everybody, they push it to another day. But the thing is, like, in the back of my mind, something will happen to me, and it could just be like a little scare, and all of a sudden I go, crap, I might not be insurable.
You mean
anymore.
like driving from Santo Domingo to here?
Right. Or like you get a cramp in your leg or something,
Yeah.
right? Your insurability is going out the window.
Yeah, like just like weird little things like that. But it's very true. We don't know what's going to happen, tomorrow. So
Yep.
Yeah.
like it's so important to have those things in place. And I think about my family and like, is the current death benefit that I have enough? And I don't know that it is. So that's why I'm going forward and getting that policy.
Yeah.
And I'm doing it with a convertible term policy within a whole life company, so that in the future, as my cash flow increases, I can convert that and I'll have that place to store my money, so I can then pull money out and invest in other things
Yep.
in the future. And just having that optionality is so much more important. Now, is it more expensive? Yeah, it's a little bit more expensive. You're paying that premium so that you can possibly convert it in the future. And that's why it's not always best to shop for the cheapest price.
Right.
In some cases it is. But if you don't already have a policy in place and you think it's interesting and you kind of identify with the concept, then I would strongly suggest go out and get one of these whole life convertible term policies, and then have that option in the future and just have that locked in, because you never know what's going to happen in the future.
Yeah.
But one thing to remember too, like even though the cost, whatever, when you buy convertible term policy, when you actually convert it, a lot of companies in a lot of situations will take 1 year of the premium and roll it into the conversion. So it's not really lost premium.
And a lot of the times too, they're not that much more expensive. It depends on the company, but I'm setting up 2 term policies for a client right now. She's getting them on her sons, and because she eventually wants to convert it to a whole life for them. And it was actually cheaper than what she had researched online previously. So
Well,
it could actually be cheaper.
It depends on where you're getting it. Like there are different
Depends on the
companies
company.
I'll just name some companies like Protective and Banner, for instance. They're 2 companies that if you want cheap term, we have them, we sell them from time to time. I'm not a big fan simply because it's just 10-year term, no conversion, no living benefits, no nothing.
Dave Ramsey style.
Yeah, exactly. Just the cheapest of cheap terms. There are other types of term that are like living benefits term, like a couple companies have that. Usually those are not convertible. They're convertible, but they're convertible to IUL or other UL chassis products.
Right.
So they're not good. Now, I don't have a problem with having a living benefits term policy. If you're saying, hey, for the next 20 years, I want this policy just to be like a catastrophic health insurance policy along with term temporary life insurance policy, that's okay. But at the end of the day, nothing beats a convertible whole life insurance policy, because there's nothing out there that is going to provide for you the guarantees and the benefits that it's going to provide for you. There's literally, it's not even a close
And even if it is a little bit more expensive, like you said, Charles, it's going to be,
and it's not that much,
man. It's really, it is absolutely worth the extra $5, maybe $10 a month to get the convertible term, and eventually, like you said, get all the benefits of whole life.
It's funny. People are like, it's so expensive, and it's like, you're talking about going from $60 a month to $80 a month.
Yeah,
like really, if that's gonna be, like, I would encourage you really hard, if that's your mindset, open up and think abundantly, and don't think so small, scarcity minded.
Right. I mean, I think everybody can find an extra $15, $20, protect your family, lock in your insurability, eventually take advantage of a very, very powerful asset.
Well, and think about it this way, mortality tables are what they are, right? Like, every company, every life insurance company is dealing with the same exact mortality table. So when we're talking about a commoditized product like term insurance, every single one of them would be about the same price if the value of them all were the same, right? And so when you look at term insurance, the reason the prices vary so differently is because the value is so different, based on the company, based on the extra benefits that are included in it. And so I'm not saying it's good or bad, the cost, it's just you got to figure out what does that look like for you, and is it solving your problems or your concerns.
And I'll tell you what is actually expensive in the long run is not having the coverage, okay? Not being able to qualify. And also, you guys were talking earlier about the living benefits of these, the whole life life policies when you eventually convert them. And this tied into perfectly to one of the things I wanted to discuss with like what's going on with my father right now, why it's so important to lock in insurability early, guys, while you are healthy, preferably as young as possible, so that you can get those benefits later on down the road when you're ready. Because my father, he's 70 years old. He's starting to fall, lose his balance a little bit more. He broke his wrist in 3 places. He fractured his knee. He has MS and all this stuff. He has nothing. He has no coverage. He relies on Social Security benefits. They gave him, I think, 19 days of therapy, like rehab therapy or whatever, and then that was it. They just kick him out. And it's like, you know, again, it was one of those eye-opening experiences where, like, I'm seeing it in real life, how beneficial a policy would be if he had set it up, you know, a long time ago, being able to tap into, you know, maybe the living benefits, chronic illness, or even just being able to take policy loans, whatever, to get the care that he needs. Like, is 19 days of rehab therapy enough? Maybe, what if you need 6 months? What if you need 12 months? You know, and you know, not having access to those benefits is what's actually more expensive in the long run.
Yeah. Oh God.
You have the perfect example, right? Like, by far is such an impactful and inspiring message to give. So,
yeah, I mean, I've shared this story a bunch, but if you haven't heard it before, my father-in-law was diagnosed with stage 4 pancreatic cancer on November 4th of 2020. It's crazy. In the middle of COVID, all that stuff, we were playing pickleball, and he literally had to go to the ER because he thought he twisted his ankle, and it was so painful. Found out he had a blood clot. The blood clot went from his ankle to his groin, and scanning the blood clot in his groin, they discovered a 7.5 centimeter tumor on his pancreas that had already spread to his liver. So think about it this way. You go into the hospital thinking you twisted your ankle, and you literally 4 hours later are told you have 90 days to live.
I can't even imagine.
Right? Now, because of the living benefits, even though the doctors literally said it's too aggressive, there's nothing we can do, we could do chemo or radiation. If we do, we might be able to get you to 6 months to a year, but your quality of life is going to be trash anyway. And so, you know, the doctors were literally saying, this is so far gone that the dosage of chemo and radiation we're going to have to give you is going to kill you anyway. So we would just advise you to enjoy your family, get your house in order. And this is the doctor in the,
That's crazy,
like,
man.
Right?
And
they were saying this, and my wife and I were sitting there, and I remember getting pissed, like sitting in the corner being like, WTF, like, what is happening?
What just
right now?
happened? Right.
This is not who we are. We don't just give up because some stupid doctor told us you got 90 days to live. That's not, like, I'm like, am I the only one with my head on straight right now? I got, like, actually upset with the doctor in the room.
Right.
And I was like, that's not how this is going to go down. Like, and I knew he had a policy, and I knew he had all these things, so we were able to accelerate the death benefit and utilize it for alternative treatments. Now it's almost $250,000 of alternative treatments, but I got news for you. It's almost 4 years later, and he's still alive. He just came down to the Dominican to visit.
That's awesome.
He's playing golf 4 days a week, and guess what? He's going to die with cancer, but he's not going to die because of cancer.
Right.
Because we've got it under control, and that's the problem in the medical institution. They want to kill the cancer, and because we had the cash to pay for stuff insurance wouldn't, he's alive. And that is control. We talk about control, right? By locking in your, and this is varying a little bit from the topic of the video, but it's so relevant because when you lock in your insurability, you are locking in control of your entire medical directive, of your entire legacy, of your entire plan. And make no mistake about it, controlling your medical directive is key to controlling your plan, because 70% of all bankruptcies and retirement happen because of medical issues.
Right.
Period.
I don't think people plan for that, especially when they're younger. We're not really worried about that. I'll tell you what, Chris. Those living benefits was like at the top of my list for getting my policies. Like I'm 35 years old. I take care of myself. Whatever. Do I need to worry about long-term care expenses right now? I would actually argue yes. You need to do it now, as early as you possibly can, so that inevitably, when we all break down at some point, we have, like you said, control, and we have options, and the care that we get, and we're in control of our medical directive. I don't know how anybody could say anything bad about that.
I just had a guy this morning on my WhatsApp. One of the agents on the team sent me a message. Hey, my pastor is 70 years old, and he just had a health issue, and he's thinking about long-term care now.
Oh, man.
And he's like, he's going to be 70 in a couple months, and he's like, and I'm like, you don't even want to know how much long-term care is going to cost at 69 years old if you can get it if you can get underwritten for it in the first place.
Sad.
The problem is you have to think so long-term, and most people just don't have that kind of vision or discipline, right? And so, you know, and that's the beautiful thing about a properly designed whole life insurance policy, is that you can kind of have your cake and eat it too. Like, you can put your money into this policy, you have liquidity of the money very similarly to the way you would have in a bank account.
Yep.
It's going to grow for you. It's going to beat your bank account returns. It's going to be kind of like a bond-like return over the long run, which isn't super sexy, right? But it's not horrible either.
No.
And
Numbers look good over 30, 40 years.
and you're going to have these living benefits that are going to be there to solve your problem for you. And you're going to have the life insurance from a legacy perspective. And so it's that's what we talk about, having real control and getting each dollar to perform multiple functions, you know? So
and allow this video to start really getting you to think about those different stages of life. Because you may be young, you may be in your 20s or 30s right now, not thinking about what your 50s, 60s, 70s are looking like. But
they're coming.
You're most likely going to make it to that point, right? So what are all the things that could happen in between there? And Chris talks about all the time, you know, what's your emergency fund? What is actually emergency? You know, having those living benefits, that is like a real emergency plan. Being able to implement what Chris's father-in-law was able to do, and it literally bought him 4 years of life. He's still alive today because of the living benefits.
Yep.
And because somebody came up to him and said, hey, you need to have this. And Chris has said before that he was reluctant to get it. He didn't think he needed it. But at least Chris was persistent, had the foresight, and said, hey, you need to get this. And he went through with it.
Yep.
And it literally saved his life.
Yep. Yeah, there's no doubt.
That's so crazy, man.
It's super important.
I got chills the first time I heard that story, man. That's
crazy.
That hits home again, especially when it's real in your family, or you know, somebody you know or whatnot.
Yeah.
You know, sometimes people think they're too young. You know, like, I don't need it right now. I see people on YouTube sometimes, you know, talking about how they have cancer or whatnot, and you know, it's not likely, but you know, we are supposed to, or it's best to prepare for the worst, hope for the best. Because anything can happen at any time. Yeah. And if you don't have your insurability locked in, what are you going to do?
Yeah, and we don't know. I mean, the way I look at it is we live in a super toxic world, right? And so there's only so much we can do to really be healthy. Because all of our food is tampered with, all the water is tampered with. Like, I don't want to go on that soapbox too hard. But at the end of the day, there's only so much you can do to really control your own health. So you might as well at least control your money and a strategy on the back end that says, all right, it's almost inevitable you're going to get sick at some point in time in your life, and it's going to be significant. So wouldn't it be amazing if you have the ability to handle it on your terms when it does happen? And,
100%.
You know, there's probably like 70 to 80% likelihood you're going to have something like that happen to you,
right?
No matter how healthy you are. And so how cool would it be if you could just control and be able to react on a proactive level, not have to just follow the regimen that your doctor says because that's what your insurance is going to do for you, right? That's the power of this stuff.
Couldn't agree more, man.
Awesome.
That's why I'm as passionate as I am about doing this, man, because these are life-changing decisions that you make, and sometimes you don't make as well. I mean, we're talking about major impact.
Yeah.
You know, so that's why I love this stuff so much, man.
Awesome. Well, guys, hopefully you found value in this. If you did, please like it, share it, get it out there. Make sure you go subscribe to Charles and subscribe to Matt.